You're welcome to the Market Review, where we bring you key developments in the financial and capital markets as it affects the economy. Today, we'll be discussing the Russian-Ukraine conflict and implications for the Nigerian capital market. With me to have this conversation is Mr. Ayodeji, Head Retail Investment, Chapel Hill, Denham. Nice to have you on the program, Mr. Ebo.
Yeah, good morning, and thanks for having me.
Thank you once again. Before we begin this conversation, let's give a recap of market stories from last week. The Nigeria Exchange Limited notified the market that VFD Group PLC has acquired 5.17% shareholding in the NGX Group. And also, Seplat Energy PLC, a leading Nigerian energy company listed on the Nigerian Exchange and the London Stock Exchange, announced that it has entered into an agreement to acquire the entire share capital of Mobile Producing Nigeria Unlimited from ExxonMobil Corporation, Delaware. Completion of the transaction is subject to ministerial consent and other required regulatory approvals. We go on a break, and when we return, we'll continue this conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back. If you're joining us, it's the Market Review, and the conversation is on the Russian-Ukraine conflicts and implications for the Nigerian capital market. Our guest is Mr. Ayodeji, Head Retail Investments, Chapel Hill, Denham. So, Mr. Ayodeji, the first question is, and concerns when this happened, the Russian invasion in Ukraine, the whole uncertainty in the global economy and market, is how will this affect for foreign portfolio investment into the Nigerian capital market?
Okay, thank you very much. And our prayers are with the Ukrainians. We believe that when we look at the flow of foreign portfolio investments or even direct investments in the country, it has thinned out from its peak in 2020 following the FX challenges as well as insecurity. So that with that in mind, we don't expect much outflow. And however, with the current crisis, this would further hold back a lot of foreign investors from investing, not just in Nigeria, across other countries, because they want to see how things will pan out before they make any major investment decision. So for the Nigerian market, it's really, we don't expect to see any major shock in the equities market. The retail investors control close to 80% of activities in that market. Yeah. And that's why you've observed significant stability in the market. Though the retail investors are unable to meet up in terms of activities, when you look at average activities being done by the foreign investors, which would aid prices. But yeah, it also comes with its advantages in terms of creating a bit of stability for our market. So there's really no expectation in terms of the exit of foreign investors. A lot of them have gone before now, and we believe that the retail investors or the market will remain very stable, except when the major crisis occur.
Wow. Already we've seen the impacts already and various sanctions from the US and UK on the Russian banks and investments running to trillions of dollars, and even the leader of Russia, President Vladimir Putin, and his foreign minister, Sergei Lavrov. But let's look at the Eurobond market, which Nigeria participates effectively. It's already done some participation this year. Are there concerns around the market with what is happening in terms of the subscription, if we go on it again.
Okay, yes. So within the Eurobond market, what we expect to see is there will be a bit of sell-off, but also knowing that Nigeria is also benefiting, if not significantly, from the rise in crude oil prices. So compared to other countries like, let's say Ghana, for instance, you would see that in terms of the sell-offs will not be as significant as we see in Nigeria. So because we have enough, we are generating more dollar revenue even during this crisis. That notwithstanding, we'll still see a lot of volatility. So markets, I think, as yesterday, tanked, but investors are also coming into the market. We've seen that across even the S&P did a comeback yesterday and closed positive. We also saw the crypto market. So we believe that even this crisis will also present opportunities for long-term investors.
Okay, presents opportunities for long-term investors across the markets. That's a cheering one. What other segments of the market will be affected by this uncertainty created by the tensions in Ukraine? You said that investors will be cautious, so FPIs may not really come in already. We've had a domestic domination of the markets.
Okay, thanks. I think if we look at it from a broader economy and now see how it will impact on the market, the first thing is that higher crude oil prices, which we should benefit from, impact us negatively due to subsidies because our market is not regulated. The other issue that is currently happening is that we are not even producing enough. So we are not benefiting by selling enough crude oil that could have reduced the impact of subsidy.
Yeah.
Production average around 1.2 million barrels per day, and there's still significant gap compared to the OPEC quota before we even look at OPEC quota of about 1.6 million barrels per day before we compare it to the budget of about 1.8 million barrels per day. So we can see that about 600,000 barrels per day is currently not, we're not benefiting from that, or we're losing revenue indirectly. So as a result of the expected increase in subsidy, that would limit the available funds to the federal government. And as a result of that, governments will need to borrow more. Beyond that, if they are unable to borrow as much as they can based on available liquidity in the system, it means that implementation of a certain part of the budget, especially capital expenditure, may be lagging behind. They may not be able to implement as much as projected. So once we begin to see that, that would impact on the productivity of the economy. Then when you look at the consumer goods space, Russia is one of the major supplier of wheat to Nigeria. When you check 2019, 2020, 2021, they supply, I think they ranked like third in 2020, second in 2019. I will believe that with the current crisis, it means that the price of wheat would increase. And as a result of that, this impacts on Nigeria, production of bread, production of beer. It means that the cost of production would increase significantly and reduce the purchasing power of Nigerians. Bread in itself, if you look at it on a year-on-year basis, have increased close to about 30% on a year-on-year basis. So with the expected increase in wheat, that would impact. I also learned that Ukraine also supply pasta significantly. We import a lot of pasta from Ukraine. So with this crisis, it means that the price of imported pasta would also increase. Maybe positive for the local producers because once the imported becomes unaffordable, the close substitute will be the local item, but there's also that input that may also come from the global space, which would impact on the price. So by and large, we would expect that this crisis over time may slow Nigeria down in terms of our ability to sustain that positive momentum. And secondly, on Nigerians, when you look at consumption, bread is one of the major food items that Nigerians consume. And once that price also increase, would also impact on the purchasing power of Nigerians.
Wow, that's that's a very tough one. And as we wrap up, the monetary policy environment globally and looking at Nigeria, how do you think they will respond with this conflict? This year we've been battling the issues of inflation. We've been battling inflation, and Nigeria's own is coupled with inflation and devaluation.
Okay, thanks. Starting from the global space, I feel that the Fed, with what is currently happening, may want to slow down the rate at which they would hike, because their petroleum market or their oil market is deregulated. So in terms of cost of fuel, cost of gas for them to heat their houses have increased. So that may slow down the expected growth rates in that economy. So it will feed into production, and cost of goods would increase. It means that we would have higher inflation rates. So it's now going to be more of cost push inflation that may be beyond the monetary authorities, which is similar to what we're going through in Nigeria. It's more of cost push. We need to tackle infrastructure. We need to tackle insecurity. We need to tackle power for cost of production to be reasonable. It is not by bringing down interest rates in Nigeria that would reduce the rate of inflation. So I believe that for Nigeria, the monetary authorities would, as a lot of other instruments within its arsenal, beyond the monetary policy rate, if decides wants to attract foreign investors. But like I mentioned earlier, because a significant portion of foreign investors already exited the country, the CBN is not threatened by any major exit. So we don't expect to see any increase in OMO rates. And if we don't have any increase in OMO rates, and they don't increase that, we would continue to see that volume at the primary market auction. We saw the rate yesterday on Wednesday dip significantly at the longer end of the curve to about 4.3 or 4.4% because of the demand, about 5.2 times bid to cover ratio. So would interest rate is expected to remain low, and as a result of that, would see that Nigerians would, in terms of the return on their investment relative to inflation, the negative return will remain wide.
Quite a challenging one, but it's good to know how this the conflict that is affecting the globe will impact our markets. Thank you very much, Mr. Ayodeji, Head Retail Investment, Chapel Denham, for giving us some perspective on how the current Russia-Ukraine conflict will impact the Nigerian capital market. The investors will now have some understanding, and we hope to engage you subsequently on how this is playing out. But thank you once again for the time.
Okay, always my pleasure. Thanks for having me.
Thank you.
Enjoy the rest of your day.
And you too. Thank you. And that'll be all for this edition of the Market Review Show. If you have questions, comments, or suggestions on this developing conflict that's affecting the globe, the Russia-Ukraine conflicts, and how it's impacting the Nigerian capital market, please send them to tobasi.abasekong@prochange.com. Also, join our website, www.prochange.com. We already have stories around this development and how it's impacting the global and African and indeed Nigerian capital markets captured for you. And engage us via our social media platforms displayed on the screen. Don't forget that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.